You're watching news headlines on mining.com. I'm Devin Morgan. Gold climbed above $5,200 an ounce for the first time in nearly a month on Monday as fresh uncertainty over U.S. trade policy rattles markets. Spot gold rose almost 2% in New York trading, extending a third straight week of gains, while silver jumped 3% to above $88 an ounce. By Tuesday, gold gave back those gains but held above 5,100. The move follows U.S. President Donald Trump's pledge to impose a 15% global tariff after the Supreme Court curbed his use of emergency trade powers. Analysts say geopolitical tensions and investor caution toward bonds and currencies continue to support the metal. Markets are also watching U.S.-Iran nuclear talks. Any escalation in the Middle East could drive further safe haven buying. Tungsten prices have surged fivefold over the past year as tightening Chinese supply and years of underinvestment squeezed the market. Analysts at BMO warned the world has sleepwalked into a potential shortage, with inventories critically low and a deepening deficit expected in 2026. China controls about 75% of global supply, but falling ore grades, stricter environmental rules, and export curbs have slowed output. Ammonium paratungstate prices have jumped from around $300 per ton to roughly $1,775, reflecting the sharp tightening. Now, BMO says new mines, recycling, and small-scale output may help over time, but none offer a quick fix to rebalance the market. Indonesia is considering revoking the environmental permits of PTQMB New Energy Materials after a fatal landslide at its nickel processing hub in Sulawesi. The incident occurred last week in a mine waste or tailings area. One contractor was killed, that's according to the Indonesia Morowali Industrial Park. The government says authorities are conducting a full review. It may withdraw the company's permit following repeated fatal incidents. QMB had already suspended most operations in March last year after another landslide left 4 workers buried under mine waste. Now, the site sits within Indonesia's largest nickel processing hub. That's a key supplier to the stainless steel and EV battery sectors. Anglo American posted a $3.7 billion loss after taking a $2.3 billion write-down on its De Beers diamond units. The impairment cuts De Beers' value to $2.3 billion as weak demand and high inventories continue to hit the global diamond market. Despite the charge, underlying earnings from continuing operations rose 2% to $6.4 billion. Now, the company reduced its dividend sharply to 23 cents per share, while net debt fell to about $8.6 billion. Anglo says copper and iron ore will anchor future earnings as it reshapes its portfolio and advances its merger with Tech Resources. And that's where we leave your news headlines for now.